Okay, excellent. Good afternoon, it's Dennis Wilborn. Welcome to the last trading day of May 2014. My co-host is with us this afternoon, David Grandy from All About Trends. David, how you doing today? Dave? Where'd Dave go? David, I accidentally muted you. Unmute yourself.
Okay, there we go. I'm doing great. Yeah, sorry about that, folks. I got muted.
Yeah, technical issues. I hit mute all, not recognizing it would mute also. I was trying to get the hands down thing. But so how are you doing?
I'm doing great. Good week. Yeah, no problem.
And so, well, for everybody, a lot of people know who are in the Active Trend Traders group and the Bay Area Moneymaker group that I recently, about 9 months ago, became a grandfather for the first time. Our youngest son and his wife had a little girl named Alani, and my wife likes to go out and do baby shopping, if you know what I'm talking about. And what was really interesting, she came home today with this coolest toy that's got all the buttons and whistles and all that kind of stuff on it. And I hope you can hear this because she brought me a brand new market indicator. So from now on, this is going to become part of my standard indicators when I evaluate my stocks on the weekend, David. So you ready for this? Does that work for you? Did you hear it?
I heard it. That sounds like what's that, Mad Money or Jim Cramer show?
Yeah, I'm not trying to emulate the Mad Money guy or Jim Cramer whatsoever, but I thought, wow, that's a great indicator, and so it's a nice little box. You know, the kids have so many toys and all that kind of stuff, but you didn't come here to hear me talk about my grandchildren. You guys want to know what's going on with the market. I know Dave's got some awesome things to share with you today. So Harlan's saying we can use that just to assess the S&P right now. So let's get rolling. I guess just a disclaimer, want everybody to know that basically we are not making any recommendations. We both follow a system, the All About Trends system and then the Active Trend Trading systems. There are differences in that, and we just joined together, basically co-host this because we like to help people learn how to trade stocks and options, or I like to trade the options also. I like to coach and teach folks. When I worked as an adjunct professor at Chaminade University in Hawaii in their MBA program, it was a kick just seeing the process people would go through to learn things, and the learning process just always intrigues me. But we want you to remember that all materials presented here are for training purposes only, and traders should always paper trade any new method prior to the risk of personal capital. So I left this slide in place. This is a slide we had up last week, last Friday's meeting prior to Memorial Day, and we made the statement that the S&P, the Dow, was doing something different, and the Nasdaq did something different, and the Russell did something different. And as we roll into this week, the last day of May 2014 for trading, the question is the old, trader adage: do we sell in May and go away? And for long, buy and hold kind of people, sometimes that's a really good idea to do. However, for traders, we don't have to follow this old adage. I know Harlan and yourself are always talking about it's a market of stocks, not just a stock market. And I agree with that 100%. It is a market of stocks, and for traders, we can always find if we allow the stocks to come to us, we can find very great opportunities. The key words for this week from my perspective is digesting gains and patience. The S&P and Dow were up for the week. The NASDAQ was up and held its gains. The Russell, however, was up and held, but it still remains the weakest link with the in the indices. So let's take a real quick look at the indices. Here's a picture of Palo Alto Networks, which got a real big gap up yesterday. But let's take a look at the S&P. The chart on the left is the daily chart. The chart on the right is the weekly chart. And the daily, basically, here we're last Friday, breaking out of this nice little pullback. It broke out and continued to move higher this week. We had one rest day, and the S&P just continued to push higher. I don't listen to a lot of commentators, but one of the guys, somebody made a statement that while the S&P continues to push higher, many of the stocks that are actually in the S&P and the NYSE are not participating in this rally. So it's a very narrow-based rally, but I'm not going to argue with the price action. It is moving higher. It has reached the precipice or the pinnacle of this expanding top formation. So the question we face going into next week is, will we basically this be the final resistance and we get a pullback to either the 8-day moving average or the 20? It would seem that we are overdue a pullback, and this has been a really almost healthy, almost exponential type rise in the S&P. We have the stochastics in the overbought condition. However, as we see when the S&P decides to go on a run, those stochastics can stay in the overbought condition for a long time. Slight negative divergence on the stochastics, but that's about all I can say on that. It's not saying short me, and clearly we are not in a position to go long at this point. Going into next week, I think we just need some patience to see if we start getting some healthy, or when I say healthy, I mean controlled pullbacks, not only in the indices but also in the stocks that are the strong growth stocks that we follow. Take a real quick look at the NASDAQ. On the NASDAQ, this darker purple area that you can see through, that is the magic fib box of the fib retracement from the high here to the low here. And we came out here we were last Friday here, and we gapped open on Tuesday, and then the NASDAQ has continued just to kind of ease its way up. It hasn't had much of a pullback whatsoever and just has pushed its way up. No real negative candlesticks. We had a bearish engulfing correction, a bearish harami on this day, which would say, hey, that's a reversal signal, but we've powered through that, so that signal is now void. On the weekly chart, again, it looks like we're building up the right side of a cup on the composite. And as I shared with you last Friday, based on a measurement from here down to here on the triangle it broke out of, if you project upwards, it puts us back up with a target up in the 4350 area as a minimum target on how far the NASDAQ could run. Will it get there? We don't know yet, but it has done a nice job all this week of digesting the significant gains it had last week. The Russell. There we go. The Russell, as I said, is kind of the weak sister of the indices, or the red-headed stepchild, and continues that role. It got up into the fib box and then reversed down out of it. It closed below the 50. So does that indicate that we're going to drop back down and retest some of the previous support? We don't know. One of the positive things is that the Russell did close above this rising window or gap up, and because this area in here is a very strong level now of support, and so if it just turns around here without falling, deeply into that level of support, then we could just, could just be a flat flag precluding a move back further up. But as we move into next week, we will have to see. We need the overbought condition to continue to work off just a little bit. And on a weekly chart, it's a shooting star type pattern on the weekly chart. However, we are now being held up by this. In this case, is the 8 period, or approximately the 50-day moving average. So David, that's what I'm seeing on the indices. I know I've got a couple of charts to go over after you're done with your piece on some of the stocks that are setting up potentially for next week. Anybody got any questions? Or Dave, you got any comments?
Well, I think that's really great. I think it goes well with what I'm going to be showing here in a minute too. So nice job as always.
Okay. I am switching over, making you the presenter. I'm going to mute myself and answer questions.
Okay, well, thanks a lot, Dennis, and thank you all too for being on the webinar. We really appreciate it. We see many returning and some new folks as well, and we also very much appreciate the feedback we've been getting too. So thank you for that. And just going in here, the week in review, market confirmed a new uptrend on I think it was Tuesday, but we're trading at some resistance levels that I'll show you in a minute, and it'd be really great if we could just see a little bit of a healthy digestion of gains here, in a low volume, very either sideways fashion or minimal on the downside, because that would really set up some really good patterns that are already setting up. It would just make them stronger. So I'm going to go through a pattern here that we haven't talked about, I don't think, on these webinars, called the right side of the cup crossover. So let me get into that. Just looking at the S&P, we just saw this chart with Dennis. We're trading up into a short-term resistance level here, very overbought. So it'd be not out of the ordinary to see us digest some of the recent gains here. Same thing on the NASDAQ 100. We're right at a resistance level, and we'd love to see a pullback within these pink lines here. We've talked many of these webinars. We've talked about the pullback off highs patterns, where stocks come up, they make a new high, and then they pull back in an orderly manner above the 50-day back to an area of support, and then they launch higher. So in this case, I don't know if we want to see it go all the way down to this trend channel line here, but it's not out of the norm to see a pullback here. So as we're waiting on that, I'm going to talk about the right side of the cup crossover. This is a really great way to buy leading stocks at lower buy points. One of the most common basing patterns out there is the cup with handle. So you can't have a cup form without having a left side, a bottom of the cup, and then a right side of the cup. So with this pattern, we're trying to catch stocks as they're making a move back above what was resistance and are ready to perhaps start building the right side of the cup. It's a pretty easy trade. It's pretty obvious when it makes that break above the bottom of the cup consolidation area and starts building the right side. And it's easy to put a stop at, because it's just a close back into the bottom of the cup. So let me just historically go back here and let's take a look at Facebook. You can see it formed a cup here, left side, then it consolidated down here at the bottom, and then it broke out on some good volume and started to build the right side of the cup. And so this is the ideal buy point here. So it breaks above resistance here at the blue line. Maybe my line should have been red, but it's blue for now. So let's take a look at Actavis. These are some current examples. We have a stock that's formed a nice cup so far, left side, bottom of the cup, and we have some resistance level here at this sky blue line. This pink line, as we were just talking about, the index is likely to continue to digest some gains here as it's bumping up against resistance. So just an orderly pullback from here, and then a break above this pink line would be what we would like to see to take the trade there on ACT. And IOMN, the same thing. Alumina, cup shape, it's got resistance here, and we're looking for a nice pullback here to relieve the short-term overbought conditions, and find support here at the trend line, break above the pink line, then red line, and off to the races. So I mean, that's it. It's a pretty simple pattern. And why wait till alumina gets all the way up here to 180 and then forms a handle or whatever and then breaks out when you can get it the same way, almost the same identical pattern, but at a much lower point. Let the laws of physics do its work for you. It's not going to get to 180 and break out without building this right side. So if there's an opportunity to get it there where it's a very orderly trade, it's acting technically very well, it's a great opportunity to get in early, and then when it breaks out, you have the option of keeping it or adding more or taking your profit then. So just gives you a lot more options, when it gets to the breakout point. So that's pretty much it for this week. I mean, there's a lot of those patterns out there right now. So our newsletter's full of them. I just went over a couple. So what we'd like to see ideally is a digestion of gains here a little bit, and then these stocks to trigger these right side of the cup crossover patterns. So we're just going to kind of hang tight and look for that, and when it triggers, we'll be ready. So in the meantime, you can always contact us, allabouttrends.net. Send us an email, customer service at allabouttrends.net, and you can always call me too. I love talking about stocks. Many of you have called and emailed, and I appreciate it. And like I said, I really appreciate the feedback, and we're here to help you be successful. So that's about all I have, Dennis. Actually, there's one other thing. I don't know if I have it in here.
Go ahead.
We do have a 15-day free trial too. So if you want to trade these setups in tandem with us for the next 15 days, you can go to our site and sign up for that. It's allabouttrends.net. No credit card or anything needed. Just give us an email you want the newsletter sent to, and we'll be happy to do that for you.
Excellent. Thanks, David. I so appreciate and enjoy following you guys' you guys' newsletter and the updates that you guys put out, and it's some really good stuff, and I just love the way how things tie together. And it's funny that you talk about. It's not funny. I don't mean funny, haha, but it's interesting that you talked today about what I was observing over the weekend with regarding. I was looking at some breakout buy points, and I was going, oh my gosh, they're like 15 and 20% away from where the price action is now coming out and just starting to show that it's bullish.
Exactly.
And I'm sitting there going, what are we thinking? Because if you know the rules, it basically on a cup type pattern, they desire to have a 25 to 35% retracement, and so I sit there and go, oh my gosh, that means that if it retraces even 75 to 80% on the right side of the cup, that's a significant significant amount of return for a active trend trader. You know what I'm talking about.
it's almost like a cup with a handle within a cup with a handle, if you know what I mean. I mean, that's what we have here with Illumina and ACT. You know, we've
Yeah.
got a cup that's formed, and now it's going to form a handle here. Yeah, I mean, it's obviously it's in the middle of the base, but it's the same concept of buying a cup with handle when it gets to the top.
Oh yeah, without a doubt. And one of the things that I find very interesting is through all the modeling and all the research and the activity that I've gone through in working with those kind of patterns, those patterns have, you know, I've noticed that those patterns have a success ratio that is typically about 60-40. Okay, so and the risk is actually lower because you're closer to a stop loss, is what I found. Right. And exactly. You know, what is the, on a breakout trade, what is the win-loss ratio? Typically 60-40 with a 7 to 8% potential downside risk. So well, it's something to think about.
Yeah, the difference though is if you buy here, it's pretty clear where support is.
Yeah.
Okay, and it's right near where the buy point is. Whereas if you wait to get up here, it's going to be extended a long way, most likely from support, much more than it is now.
Yeah,
and
right on.
If you take a 7% stop loss or an 8% stop loss, you're just doing that based on a percentage of where your trade is. You're not factoring any technicals into it.
Right on.
Whereas here, we're selling. We would be stopping out because it broke the technicals.
Exactly.
Not just simply because it went down 7 or 8% from our buy point. And that's a big difference because I've seen that happen a lot of times. Stocks will break out, and then they'll come back down. They'll stop everybody out at 8%, but they haven't violated any technicals.
Yeah.
And then of course what happens? They find support and they take off, and everyone's like, well, man, that sucks. It took off without me.
Yeah.
But if you just look at the technicals, you know, you would be more inclined to stay in that trade.
You know, and we talked about that on the Active Trend Traders midweek market sanity check. We do a webinar, training webinar every Wednesday night, about 6:30 at Pacific Daylight Time, and we specifically walked through and did some examples of tracking through the spiders. Of when to buy, but basically based on rules. Well, you know our rules is basically bounces off of moving averages and those type of things. But you tie your exit to a solid, identifiable stop loss that is based on technicals rather than just a percentage point. And
exactly.
So, okay, we've got David. Let me come. Not you, David. But David online has a question about lower highs. David, are you where you can speak? I will take you off of. Where'd you go? There you go. David, you're unmuted. Oh.
Okay. Hey, the question I have, it comes from my experience with intraday trading, is that often I'll see a setup that looks maybe similar to this, and so I'll say, oh, I can get in here, but instead of it forming the handle, as you say, it ends up being a lower high that, you know, wants to then move down to a lower low. And I thought the purpose of a cup with handle is to avoid that situation. So when you set your stop loss, I assume you're saying that if it goes below the trend line, it's going in the wrong direction, and so you should get out. Is that what I'm hearing?
That's right. Yes.
Okay. And so you do take a chance that it could be a lower high that's going to maybe move lower, but with the market moving up and with that trend line in place, you're betting on it going in the other direction.
Yeah, and these are both very quality stocks fundamentally. I mean, we talked about how IBD, these are IBD stocks, and IBD is the best at doing fundamental analysis. So you've got the fundamentals on your side, and we've got an improving technical picture in both the markets and the stock. So
okay, sounds good.
The odds are pretty good in our favor.
All right, man. Thanks.
Okay, thank you, David and David. I'm going to switch back. Switch back to, where's our other screen? There we go. For those of you following the Active Trend Trading, I just wanted to highlight to everybody, one is we've got some big things happening in June. We've got some training modules that are going to be coming out that are going to cover both the active trend trading basics and advanced topics. Premium subscription release, we've had some soft launches on the premium subscription, but we're going to have the hard launch on that, which will include also income generating timed trades. And then we're going to be having a mentoring educational opportunities for those who qualify, a very small group of people. And the pre-launch notification on all of these will go out via our free edition of the Art and Science of Active Trend Trading newsletter. And if you aren't subscribed to that free newsletter, you can hit us here at activetrendtrading.com or check out the YouTube channel Market Tech Talk. And so, David, I've got a couple of, I'll leave this up for everybody to have your contact, my contact. And I like what you do, Dave, with regarding if people want to call you and chat with you, because I know that some people have gotten through, and I like to have contact with folks that way also. So what I want to do is I'll throw out my phone number, my business number, and it's a Hawaii number because my heart always goes back to Hawaii, but it's 808-366-0397, and I will include that on the slide for our next presentation next week. What I would like to really hit on, Dave, as I was doing my review over the past few weeks, I was, or not the past few weeks, the past few days, this week, I would have to say that as I reviewed the stock charts from my private watch list, I found the stocks fell into three different categories. One was the stocks that had broken out and already well extended past the moving averages from their breakout that happened before the market turned around and started back into uptrend. The stocks that broke out with the market, and then a couple of stocks that are still lagging but showing some very constructive movement. And I just wanted to hit a couple of those. Stocks that I like moving forward. I know you have one in this sector, but I was looking at Jazz. Jazz has done a fairly recent breakout from the downtrend and appears to be trying to move up. The thing that I like about this is it is now putting in a horizontal flag across this way, just below the 100-day moving average. So with any strength coming into the market, we could anticipate a break, and it needs to break through, unless you pick it up right here at the 140 level, but it needs to break through the 100-day, and it looks like clear sailing from there up to about 150, and if that breaks, it looks like it has resistance at every $10 level from there on up. So this is one of the ones that's made it to our list of stocks to be looking at for next week. Another one is Tesla. Tesla had a move after earnings of 20%, guys. Got up into a resistance area, has now come back now retesting the trend line. And we may get some further retesting back in the other moving averages, as it appears as if Tesla is trying to break, but it's early in breaking out from this downtrend that lasted or that started in March, early breaking out, and it's either going to find support here at the trend line or at the moving average and bounce higher into the fib box and beyond, or it's going to break down and find this lower support either down at the 20 or even down here at the previous breakout about 195. So that's another stock we're watching closely and we'll be putting out alerts on. And lastly, a off-the-wall, no, it's not an off-the-wall trade. WUBA, it was on the IBD 50 list earlier in the year, and it fell out of grace, has fallen down, but it's found support support now down here in this 136 level, and it too is approaching a potential breakout of the downtrend. Now, I'm not saying trade it prior to the breakout of the downtrend, but if we continue to find this support down here in the 139, the 39 level up to where it's at, it's bouncing between the 8 and the 50. The 50 may push it down next week. We don't know. But it's early on. It's well worth just, if you're looking for just a few stocks to pay a lot of attention to, along with the ones David already mentioned. Here's 3 more for your trade list. So anyway, Dave, what do you think of those stocks?
Yeah, WUBA looks a lot like QIHU and Amazon, some of those stocks that we've been talking about the past couple of weeks.
Yeah.
We're in prolonged downtrends and are getting ready to break out from that. So.
Yeah, does that look similar?
Yeah, exactly.
So anyway, that's all I've got this afternoon, Dave. We can open up for questions for a bit, and we can. Oh, Harlan's got. Harlan, I'm going to take you off mute, man, because you always have such a great, you have such a great presence and a wonderful mic voice. Don't you think, David? Because you have to say so, because you guys are partners.
Absolutely.
Harlan, you're off mute.
All right, I am off mute. All righty. Couple things that you kind of pointed out. You were looking at, there's a theme going on, and here's a theme. Well, first let's talk about ATHM. Very similar to WUBA, and as you can see, it's, it broke the downtrend to the upside, and what's it doing? It's pulling back right off its highs here. So it is a newer issue. You might have to take a little bit deeper look as to when the 6-month lockup comes off. So that could be an issue. If insiders decide to say, oh, 6 months, it's up, I can sell. So, and we all know what happened to Twitter when that occurred. But then again, the market was in a downtrend when Twitter opted to have their lockup. So, but it's just a name. You can see it the last week, nice and tight. So, that's one to keep an eye on. But I guess the one point that I wanted to key in on here is there's a theme brewing. And Dennis brought it up with Jazz. David had Illumina, ACT. Now I'm going to throw another one at you, REGN, Regeneron. You can kind of see, here's another one that it's got a nice, one could say it's in the bottom of a cup here too.
Yep.
So the last 3-4 days, it's consolidated sideways. The best thing a stock can do is to consolidate sideways versus pullback.
Without a doubt.
So, because that's showing strength.
And so,
when you look at those names, you're starting to see a theme here, and the biotechs, which were very, very much hated during the March timeframe, you can see they're all starting to put in basing structures, and it's just a matter of, are they going to do right side of cup crossovers and go up and retest the highs?
Yep.
I don't know, but all I need to know is if they break out, you definitely want to start to pay attention to them. So we're seeing some healthy things in that department theme-wise, which is, it's a market of stocks, and there's one theme that we're starting to see, and it's the bios might be waking up again.
Yeah.
They were the leadership, remember.
And bios can provide, well, bios tend to be a little bit more volatile, but if one looks for the patterns, it can really help with the just look for the pattern, and it helps with the protection. I mean, to minimize risk and maximize profit. So, guys, hold on. Yeah, I'm sorry, Harlan. Go ahead.
Go ahead.
I was going to say we're going to continue the stock review. However, I want to sign off on the recorded portion here, and I will just flash up this thank you for, and this is how you reach all of us. And then I'm going to stop the recording so we don't use up too much memory. And then we'll get back to the stock review.